What's up, guys? Welcome back to the channel. Heading on out with the grinder. Gonna go catch up on some podcasts and some books. Been thinking through this concept. I think I understand it enough to really explain how this could theoretically play out. And this is concerning the Russian invasion and all the stuff that's going on. The big picture here is Putin may have just signaled a currency reset, and the West will find that out shortly. More to come on that. But essentially, I think through listening to Luke Gromen and a few of these finance guys, I think that what we've just seen is the Lehman Brothers moment for this current bubble pop, if you will. Essentially, what we've done in the West is we have acknowledged we are absolutely too fake and gay to go toe-to-toe with the Russian military. That ain't happening, all right? So we're not actually gonna enforce a no-fly zone and say, hey, we don't want you to invade Ukraine because it's our favorite spot of laundering money, and it's where Hunter Biden and all his buddies go to like hook up with hookers and like do blow, and you know, a few million here, a few million there, daddy gets a few billy there, you know, like ultimately it's kind of an arms deal. It's a US installed regime, so it's not even like a popularly elected government. They had one in 2014. We removed them and replaced it with the clown actor that they have now, or whatever. I know a lot of people like him. He's you know, he seems to be performing well over there, the president of the Ukraine. So I'm not trying to get any backlash or hate on that. But the dude is a comedian and actor, and he's a talented performer. But just like Justin Trudeau, he's a performer. He's not necessarily, you know, I mean, he was installed for that reason. So, nonetheless, this has been going back for quite some time now. I've spoken about it on the channel, but we've gotten to the spot where the global monetary system needs to be reset of some kind. There needs to be some sort of new agreement or something so that we can move forward, because what we currently have is left over from 1944 and the Bretton Woods Agreement, where there were two things proposed. There was a basket of currency, a floating basket, and John Maynard Keynes promoted that. And I can't stand Keynes. Everything we do in today's society is Keynesian economics, which is, his famous line is, in the long run, we're all dead. So, you know, print money, essentially. But he thought that governments could play a major role in stimulating economies and then putting the brake on economies. And he thought that they could essentially steer economies away from recessions and depressions and kind of make the line just calmly go up. And that's just not how life works. Like, how life works is it goes in cycles. There's ups, there's downs, there's crashes, there's shakeouts, there's booms. That's what makes it exciting. You know, that's what makes it exciting, in my opinion. Life is like a rally car race. It's not just like going around an oval at a constant speed just continually for 3 hours. It's got factors to it. But nonetheless, that's what was proposed, and what won was the US's currency is essentially gold. We're the highest domestic producer or exporter in the world. We're the largest creditor nation in the world, and our currency is literally backed by gold. And you're better off not even to have the gold. You might as well just buy a T-bill and get like a 7 or 9 or 10%, 12% interest rate on your gold. So think of it like this. You have $35, that's an ounce of gold in 1944. And instead of taking possession of the gold, which you could, you had the option to, we would just give you like 10% on a government bond, which allowed us to print and dollarize the world and allowed us to put dollarized debt around the entire globe. And then we go essentially broke in the late 60s. In 71, we go officially broke. Nixon comes out and says, hey, we got to cancel the gold window. No more gold. You can't exchange it for gold. But, you know, the U.S. is by far the strongest economy in the world. They gave it a big pep talk, etc. And the next day, the stock market ripped. I mean, it went right up. And people were like, huh? How's this happening? Well, there was a currency devaluation at that time that occurred. And what we saw through the 70s is gold went from being held down at an artificial price of $35, and it essentially went all the way up to $800. And it was a currency devaluation. And it was the inflation of the 1970s, and it was OPEC, and there's a whole lot of stuff that happened there in the 1970s. A lot of people thought that by the time we got to the 80s, there'd be a greater depression, and that actually didn't happen. And so what has occurred is we got through the 80s, we essentially, there's a lot of things we did in the 80s and 90s, but the US made a conscious choice in the 90s to print their way out of recessions. And we've had 3 big uh-ohs that we've printed out of since then. So because we have the world reserve currency, we were able to print out of the dot-com bust, we were able to print out of 08, and we were able to print out of 2020. In 2008, the Chinese government came out and said, we need something besides dollars because it's really kind of crazy that we're paying for oil in dollars. What Nixon did in '74, while there was all this crazy inflation, was he worked a deal with OPEC, essentially Saudi Arabia, to be their protection arm, their mob, their racketeering effort, but all oil would be sold in gold, or would be sold in dollars. And so it artificially propped up the dollar and became the petrodollar. So we weren't backed by gold anymore, but we were backed by dollars. I think what Putin is doing here is he's setting up a position to break the worldwide banking system. I know that sounds crazy, and when you hear about like the nuclear option is he breaks the worldwide banking system. Let me explain to you how this could work. One, I think it's the Lehman Brothers moment, where in 2008, where you heard about Bear Stearns, they went bankrupt, and then Lehman Brothers, and everyone's like, that's weird. Jim Cramer's on TV saying that we got the best economy going on right now. You know, Dave Ramsey's saying everything's fine. Like, all these people are out there like going like, yeah, everything's totally cool. And then what happened is you saw this daisy chain of just like, house of cards just fell. Pulling the 7th largest economy in the world and the 2nd largest oil exporter in the world and blockading them, to which I don't think that they were not expecting it. I think that they were very much anticipating it, being that they sold all their treasury bonds in 2018 and went to literally gold. I did the math yesterday. They have 2.3 tons, recorded tons, metric tons of gold, which is approximately 74 million ounces of gold. Here's how Putin could literally break the entire system and essentially ignite a currency reset, and, like, you know, whether it's peaceful or whether it's another Bretton Woods, essentially just change the game. And here's how he could do it. He could create an arbitrage, per Luke Groman on this. I'll try to link to some of his videos where he discusses this. He could create an arbitrage where he says, look, we're selling oil, 1 ounce to 1,000 barrels of oil. Luke gives that example because what it is, it's a 50x arbitrage. Essentially what you just did there was you just took oil way up, you just took gold way up. Well, really, you sold oil cheap. Let me back that up just a little bit. So essentially at a 1 to 1,000 ratio, what's happened is you've got gold at $2,000 an ounce. You've got oil at $115 a barrel. So what you've done is you've essentially taken 1 piece or ounce of gold, which is $2,000 today, and you have created an arbitrage for somebody to scoop up that oil, which is worth $110,000 or $115,000 for $2,000. So what you're doing is you're rising or raising the price of gold, and you're dropping the price of oil relative to gold, but what you're doing is you're creating an epic short squeeze on gold. Well, in a world where gold goes up 50x, well, silver ratios with it. Oil actually, because of the law of one price, meaning like you're not gonna have this arbitrage for very long, it's only gonna last for a few hours or a few days. Profiteers and speculators are gonna jump in and occur this. One, Putin is essentially exporting energy, but he's importing gold. A lot of Western nations, Europe and things like that, Canada, their governments don't hold gold. So what you're doing is you're causing them to print their currency to acquire gold. So you're causing them to devalue their currency while they're at a point of rapid inflation already. So it's kind of like you're entering into a curve, kind of like the truck's entering into right now. And instead of slowing down to 31 miles an hour, you're going into that thing at 60 and you're downshifting and going up to 90, 95. It's gonna be a rough curve. And so that's essentially what he could do, where he creates the short squeeze on gold and he breaks the COMEX. Because as people rush to withdraw from the COMEX and take these future contracts out, the COMEX will just change the rules like they always do and cash settle. That's more money printing. So what he could do is he could force this epic squeeze on global energy, where global energy goes through the roof. He could even slow roll it a little bit. He could force a squeeze on gold or even silver, which would really break the banks. You're looking at the entire mining supply is about 850 million ounces a year. Bank of America, as of this week, as of close of business yesterday, was short 800 million ounces, an entire year's mining supply of silver. We think that there's only about 5 billion ounces of silver above ground. And so he could even go into silver and just say, look, it's such a tiny market that all these banks like Bank of America that are short this product, meaning that they're short at $25 an ounce, he could pump that thing to $500 an ounce if he wanted to, by just saying, yeah, we're only selling gold or only selling oil in silver. It's going to be 1 ounce of silver per barrel of oil, essentially taking the price of silver to $110 overnight, breaking the Bank of America and other ones like that, which is fine. Banks always get bailed out. So what happens is you have more money printing. And so you force the US to print their currency. You force Canada, you force the EU to print euros. You force printing. And you increase the price of oil, and you increase the price of the COMEX, and you break the entire daisy chain as it all happens. Well, whether he does that or not, it still may occur, because what has just happened is you've got like Sberbank, which is a bank I'm invested in, but they hold the trading on this week. Largest and best connected bank in Russia. They essentially are pulling out of the EU. They're creating this line of defaults. And so what you've done is you've just created, like, it's not just like, you know, when people are talking about like Everbank and these Chinese developers that were gonna miss their bond payments, and everyone's like, this is the Lehman Brothers moment. And it's like, no, it's not the Lehman Brothers moment. Like, that's really rather small. Like, we're talking under $1 trillion. Cutting the entire Russian nation out of the worldwide economy, you're talking multiples of trillions. That's the Lehman Brothers moment. And a lot of people say, well, the central banks can just print. Yes, they can. But you have inflation at this point on the rise from 7.5. You have diesel prices passing $5 a gallon. I think they're going way higher, way higher. That's why I've been buying oil stocks. I bought BP yesterday, I bought Shell yesterday, I bought Exxon yesterday. I added to those positions, and then I bought an option on Exxon, and I made 152% on the day. Like, I'm up like 152% on just an Exxon option, which is ridiculous. So I think that that's what we're seeing right now, is that like we're in this position where it's the purpose of the Russian invasion is to signify or begin the process of a currency default around the globe. Now, here's the second part of this. Putin doesn't hold, or the nation of Russia, the country of Russia, doesn't hold a lot of US Treasury bonds, but they hold a little. The US came out immediately after the invasion, not going to provide air support, not going to actually do what we normally do, but we kicked them out of the SWIFT system, which is just like being part of a group chat and getting kicked out of it. That's fine. You just have to, it's more cumbersome, but you have to do your transactions over the phone instead of like talking to the whole group chat, which is, you know, posting in your Discord server. Then, you know, you just essentially have to call and work your way around it. You're gonna have to be on the phone more. It's just a fancy, you know, way to settle transactions. Well, now that we kicked them out of SWIFT, China's learning like, oh, we see, because China wanted something besides the dollar in 2008 when we started to print. So what's going to happen here? Well, what has happened here is we have signified, and I don't think the US elites know what they just did. We have said that the most riskless asset in the world, the one that is as good as gold, not anymore, but it's good. We always make good on our bonds. We print all the time, but the US Treasury bond, it's good with us. We have told another sovereign nation that we will block your riskless 2% interest paying garbage anytime we want if you don't play by the rules. So what we have shown the world is the US Treasury bond is not safe, and we will not keep our promise, and we will not keep our word. And I think that's the point where the entire globe now goes, if you're a central bank and you're not friendly to the US, you go, oh, they can freeze our assets anytime they want. Good to know. Knew they could do it, but it's good now that we have evidence and historical evidence that they actually did it. What happens is you have an issue where the US government takes in $3 trillion a year in tax receipts. They spend $4 trillion. That's at a 0% interest rate. the inflation in this country is so damn high that you have to raise the interest rates higher than the inflation. Meaning if you have 7.5% inflation, which you don't, because those aren't how we used to measure it in the 1980s. That's how we measure it now. We keep changing these numbers. But you would have to, even on your numbers, on those numbers, you would have to increase the interest rates to 9.5% or 10% to get ahead of the inflation. Well, if you are deficit spending at $1 trillion a year and you've got 30 trillion on the books, and that interest rate goes up to just 1%, 2%, 3%, you're bankrupt. I mean, you're already bankrupt, but you're fine as long as you don't have to pay any interest. But the second you have to pay interest, your entire tax receipts of $3 to $4 trillion is going to go to interest payments, and that's before you fund the government for the year. Essentially, what I'm getting at is more money printing. On top of that, we have the demographics of the baby boomers, and we owe them $100 trillion. I am not kidding. Like, that is literally what we owe them. The net present value, meaning if you were to pay all the debt today, all the IOUs today, it would be $155 trillion is what we owe. What I'm getting at is that the US is bankrupt, and it's gonna be like, oh, Trav, everyone always says that, but one day you're gonna wake up and it's gonna be over. And by over, I mean life will move on, but the banking system won't work, the whole old way of doing things won't work. And I think, I mean, obviously, the safe havens there are metal, silver, gold, possibly cryptos. This is why I sell as a broker, silver and gold. You guys can email me below if you want to buy silver and gold, or you want to talk more about that. But I think what Russia has done is two things. They have proven that the US will not keep their word, which means other nations will not buy their bonds, meaning more money printing, because we'll have to buy our own bonds by printing up our own money to finance our own debt, which will cause more inflation. See the death spiral? Which means we can't raise the interest rates, which will cause more inflation, which means we have to print more money, which means we're done. The game's over. It's just, how many years of clown town do you want to go before you just say, hey, look, it's over, no more money printing, baby boomers get screwed, and we're going to have a currency reset. Putin just did that. That's just what he did. Is he essentially is like, yeah, there's going to be some pain here, but Russia's no stranger to pain. They've had, they had almost a hyperinflation in 1998. They had a complete collapse in 1991. They are very well aware of being kicked out of systems and being blockaded and sanctioned. It's nothing new for them. They're used to this. It's the US that's not used to this, and the US that's gonna have a problem when we can no longer export dollars and import stuff. And that's the big problem. I'm not saying long-term America's super screwed, but I am saying they're gonna have to reindustrialize. They're gonna not be able to financialize everything. I mean, US has got a lot of pain coming, and the Soviets, or previous Soviets, have already gone through that pain, and now they're coming out of it a generation later. We are just entering into it. And the US elites essentially are putting that first nail in the coffin, and I think that's the thing that everyone's missing and what just occurred. So more on that later, but those are my thoughts. I think that this is the Lehman Brothers moment. I think that this is, I'm not saying you're gonna see a market crash, because it could crash up, and I genuinely think markets could crash up. So what assets do you get into? Silver, gold, crypto, oil mining stocks, oil producers, crypto or gold mining stocks, silver mining stocks, commodities, agriculture, that stuff. You don't get into tech stocks. Like, tech stocks are not where it's going to be moving from here. I think that 40 years of no inflation, you can print money and export it, I think that that's over. And we've entered into the late 1960s, where the average guy is like, yeah, man, everything's going to be fine. It's just transitory. It's all going to be okay. And it's like, no, man, like, we're back to the 1970s. And so what worked then is what's going to work now. And that's how I think you should position, because a lot of people did super well during those times, super well. And so, in my opinion, we're early. People still don't know. You know, people still think silver's a joke. They still, at this moment in time, March 5th, 2021 or 22, people still think, you know, some people still think crypto's a joke. We'll see. Money printing makes crypto go up, and the money printer hasn't even begun to go burr yet. And this will probably signal an entire currency reset at some point in the 20s. Probably between now and 25, certainly by 2030. But I think we're kind of like in the crisis part where we had the virus, and then we're having the crack up boom, and now we're having the crisis, oil crisis, food crisis, bird flu crisis, fertilizer crisis, crisis after crisis after crisis, and then we get the currency reset. And that's when the average guy loses what was remaining of his freedoms, because you're gonna get a digital currency. And that is something to fight against. That is the hill to die on. And those are my thoughts on it, guys. So I will see you guys down in the comments. Thank you for sharing these videos with somebody that maybe needs to hear them. And until next time, thank you for the likes, and I'll see you down below.